Hello students, welcome. This is Dr. Mercado speaking. This is a lecture for my Accounting 1304 Introduction to Accounting 2 class. I hope all of you are doing great, having a fabulous week, staying positive. Now during this week we're going to be covering Chapter 13, which deals with accounting for merchandise inventory. This is actually one of my favorite chapters because we get to calculate our ending inventory, either the inventory that has been sold or the inventory that we have on hand. So it deals with a variety of different inventory methods. This is a chapter that has a lot of information. Please make sure that you read it carefully, okay? So in this particular chapter, we're going to learn about the cost of goods available for sale during the accounting period, as well as the ending merchandise inventory. Cost of goods sold is reported on the income statement and is used to determine the gross profit for the period. The ending merchandise inventory is reported as a current asset on the balance sheet. So we have those two items reported on two different financial statements. Cost of goods sold, which is an expense. This is how much it costs us to manufacture the product or purchase the product. That goes on the income statement. And then the ending merchandise inventory, that is the inventory that we have on hand that's available to be sold. That goes on the balance sheet. Okay, so there's a lot of information that covers the impact of merchandise inventory on the financial statements. It also explains the two principal systems of accounting for merchandise, which is the periodic inventory and the perpetual inventory systems. So there's different calculations for both, pros and cons for both. So make sure that you read over that section. The core of the chapter, I guess, is the actual computation of the cost allocated to the ending inventory and the cost of goods sold using different inventory methods. And the inventory methods that we're going to be using or going over is the specific identification method, the FIFO, which is the first in, first out, the weighted average, and Lifo, which is last in, first out. Okay, so the actual physical flow of inventory does not have to match the method used. Usually during periods of rising prices, Lifo produces the lowest net income and FIFO produces the highest net income. In addition, we're also going to learn about different estimates that can be used to produce the inventory and cost of goods sold by using either the gross profit and the retail inventory methods. So there is a lot of information in this chapter and it can get confusing, but it's just a matter of clearly understanding, okay, what are we trying to achieve here? What are we calculating? Okay, are we figuring out the inventory that was sold, or are we figuring out the inventory that we have on hand, our ending inventory? Okay, so let me quickly see. Yes, I had a note here for myself so I would not forget. Now this is a super important problem. Why? Because you're going to see it on your test, okay? So you're going to be seeing something similar to problem 13-6 on your test. That is why I'm going over it with you, so that way you could see how I am calculating each of these numbers, okay? So let's pay extra close attention to this problem, as you're not only going to have it for homework, you're also going to have it on your next exam, okay? So having said that, let me jump over to problem 13-6, okay? So there's a lot of information in problem 13-6. They're asking us to calculate the specific identification, FIFO, Lifo, and weighted average. All four different inventory methods are going to be calculated in this problem. So yes, it's going to be long, okay? So let's go over the data presented in the problem, and then I'll explain a little bit of the setup that I did to produce the solution for this problem. And you can do it however you want. I just like my information to be very organized and clear for me to understand, and that's why I create these tables, but it's just me, okay? If you find something easier to do or more efficient, go ahead and use it. I'm not against that, okay? So it says Swing Company's beginning inventory and purchases during the fiscal year ended September 30th were as follows. Then they give us a variety of dates, the beginning inventory, and then the purchases as they occurred in a time sequence, the number of units, the unit price, and the total cost, okay? And then it says use the following information for the specific identification method. When we are using the specific identification method, they're telling us that there are 1,300 units of inventory on hand September 30th. of these 1,300 units, this is what we had based on each of these purchases outlined here. Okay? Required. We are required to calculate the total amount to be assigned to cost of goods sold for the fiscal year ended September 30th and the ending inventory on September 30th. So there's two things we have to calculate, okay? Cost of goods sold and the cost of our ending inventory for each of the following methods: FIFO, Lifo, weighted average, and specific identification, okay? So I've set up these tables here. Okay, the first one is for FIFO. FIFO stands for first in, first out. The first items that you purchase are the first items that you're selling. So you sell the oldest and you keep the newest. That's how it goes. So under FIFO, you're always going to sell your oldest inventory. That is going to represent your cost of goods sold. And you're going to keep your newest inventory on hand. This is what you have remaining. That's going to be your cost of your ending inventory. Okay. So the layout is we're going to have the date. We're going to have the different description of the purchases. And then we're going to have our cost of goods sold section. So under our cost of goods sold section, we have the number of units, the unit price, and the total. Cost of goods sold represents the goods that were sold. Okay, these are the number of units that were sold during the specific period. Okay, then the next three columns is the cost of my ending inventory. The cost of your ending inventory, these are the units that are still sitting in your warehouse. These are the units that you have not sold. Okay, and once again, we have the units, the unit price, and the total. Okay, so what are we trying to do here? The problem is telling us that we have 1,300 units on hand. Okay, so we have 1,300 units of inventory on hand. So that tells me that that represents the number of units that have not been sold. That is what's sitting on my warehouse. Okay, so I've got 1,300 units that have not been sold, and that we need to figure out, okay, what is the value of those 1,300 units that we have not sold? That's going to be your cost of your ending inventory. And also we want to know, well, what's the cost of the units you did sell? That is your cost of goods sold. Okay, so let's focus on FIFO first. First in, first out. You sell your oldest, you keep your newest. So by me saying that, I know that I'm going to keep my newest units. Okay, so I need to keep my 1,300 newest units. Okay, so I know that my newest units are my 7th purchase, my 6th purchase, my 5th purchase. These are my newest units. So I'm going to keep 1,300 units of my newest. So the first one I'm going to keep are those 700. I'm also going to keep those 200. That gives me 900. So that means that I have 1,300 available. That means that out of the 800 that I have on my 5th purchase, I'm going to keep 400, and then I'm going to sell the other 400. Okay, and we'll see that in a bit, how we split it up here. So the first thing I'm going to do is I am going to start off with my October 1st. Okay, you have to keep it in order. Stay organized. This is my beginning inventory. Okay, now the question becomes, did you sell or did you keep your beginning inventory? Well, it says that I sell my oldest and I keep my newest. So this is my oldest inventory. So that means I must have sold it. Okay, so I'm going to sell those 400 units at $20 a piece, and then I'm going to multiply them, okay, to get my total. Okay, because I'm using Excel, I'm just going to run the formula down. That way it'll do automatically. But what I do is you multiply your units times your unit price to get your total. Okay, so it's going into the cost of goods sold because these are the units that I sold. Okay, first I'm going to keep track of the units that I sold, and then I'm going to figure out what I have not sold. And what I have not sold are those 1,300 units, which are my newest units. Okay, so that happened on October 1st. October the 18th, this is the first purchase. Okay, did I sell or did I keep this unit? These units were sold because they're old, okay? I sold all of these 500 units at $20.50 a piece. That's $10,250, okay? Then we go to the next one, okay? This is the second purchase. Okay. And we have 200 units that were sold at $21.50 a piece, okay? So I know that I've sold these units. Let me just mark it here. I know that the units that I kept are in this quadrant right here, okay? Those are the units that I kept. Those are my units that I'm going to be putting over on my cost of ending inventory. Everything else I've sold, okay? Once we get to that fifth purchase, I know that 400 I sold and 400 I kept, okay? But we're not there yet. So the whole top up to the fourth purchase are items that we sold. Okay, January the 12th. This is my third purchase, okay? I have 300 units at $23 a piece. That's $6,900, okay? Then I have March the 17th. That's the fourth purchase, okay? 900 units were sold at $24.50, okay? Up to now, these represents all of the units that have been sold. Now the problem said you have 1,300 units left. And according to the method they were using, the ones that we're keeping are the newest units, okay? So I need to figure out, okay, I have 1,300 units left, okay? I know I'm keeping the whole items for my seventh transaction, okay? For my seventh purchase, I kept all those. I kept the whole 200 for my sixth purchase, okay? So that's 700 plus 200 plus, out of those 800 units from the fifth purchase, I kept half. I kept 400, and that gives me 1,300. So that means that this fifth purchase, which is happening on June the 2nd, this is the fifth purchase, okay? I know that I had 800 units, 400 are still sitting in my warehouse. So that means that you sold how many units? If you had 8 and you have 400 sitting on your warehouse, that means you must have sold 400 units at $25 a piece, okay? So now these represents the units that were sold. Now I'm going to go to my next set of columns, and this is going to represent what I have on hand. This is my ending inventory. So I know I sold 400. I had 8. That means I had 400 remaining in my ending inventory at $25 a piece. And then that's going to give me, let me see, 10,000, okay? So I have 400 that I kept, 400 that I sold. That gives me my 800, okay? Now we go to August the 21st. That's my sixth purchase, okay? I have 200 units, and these are 200 units that we still have. So whatever units you have in your ending inventory, you're going to put it on these last three columns, okay? 200 at $26, that is $5,200, okay? And last but not least, we have our last transaction going on September 27th. This is my seventh purchase, okay? I have 700 units at $27 a piece. That gives me $18,900. Now what I went ahead and did is I added the total of my units, and I added the total of each of my sections. So the total of my cost of goods sold is $61,500. And I sold 2,700 units. So I sold 2,700 units at $61,500. And then my ending inventory is I have 1,300 units left, which is what the problems that we had left on our ending inventory, 1,300. And it's going to be valued at $34,100. So whatever we put on our balance sheet, cost of goods sold goes on your income statement, okay? And then the cost of the ending inventory goes on your balance sheet, okay? So I'm going to put on my income statement an expense to my cost of goods sold of $61,500. On my balance sheet for my ending inventory, I'm going to value that at $34,100, okay? So you will always have 1,300 units left on hand, and you're always going to, in this particular example, sell 2,700 units. Regardless of the method that you used, you're going to sell 2,700 units and you're going to keep 1,300 units. It's just a matter of which units are you keeping. Are you keeping the old? Are you keeping the new? Okay. In this particular example, the first one for FIFO, I am keeping the newest units. Okay. And I am selling the oldest. Now, we're going to apply the same logic, but now we're going to apply it to LIFO. Okay. Once again, we're going to stay with 1,300 units. But now using LIFO, LIFO stands for last in, first out. I'm going to sell my newest units and I'm going to keep my oldest units. Okay. So now what I'm keeping are my oldest units. So let me move this up. Okay. So I'm keeping my oldest units. So these are my oldest units. My beginning inventory is my oldest. So I'm going to start with 400. I'm going to keep those. I'm going to keep those 500 from my first purchase. I'm going to keep those 200 from my second purchase. And out of the 300 from my third purchase, I'm going to keep 200. That will take me up to 1,300 units. Then everything else is going to be sold. Okay. So now for this particular example, for LIFO, now I am keeping my oldest units. You sell your new, you keep your old. Okay, so first you have to identify, what am I keeping? Well, I'm keeping my oldest units. Okay, so now we can start working. Okay, once again, we're going to start with October the 1st. That is your beginning inventory. Now, be very careful. These 400 units you are keeping, because you're keeping those 400 units. That goes in your second set of columns. That goes under your cost of ending inventory. So I'm keeping these 400 units at $20 a piece. So I'm going to multiply. Okay. And then that gives me 8,000. I'm just going to run the formula down. That way I don't have to worry about it. Okay. So I'm keeping those. I know that on October the 18th, okay, we had our first purchase. Okay, I'm keeping those 500 as well. Those we did not sell at $20.50. Okay, and then we're going to November the 25th. We have our second purchase. Okay, and our second purchase is 200 units at $21.50. That gives me $4,300. Now we need to be careful on that third purchase, okay, which is happening January the 12th. Okay, now on this third purchase, okay, remember we have to come up with 1,300 units. So far I have 1,100 units, so I know I have 2 more 100 units to go to get to 1,300. So out of the 300, I'm keeping 200. Those are not going to be sold yet. Okay, and that means that 100 of those units were sold at $23. Okay, I'm going to multiply it. And this is where students usually have the most confusion. Why is she splitting it? Well, I'm splitting it because in this particular purchase, that is where I complete my 1,300 units that I have left on my ending inventory. So on that third purchase, I had 300 units, but I only need 200 under my cost of ending inventory. So these are the units that I have not sold. So that means I have not sold 200 units. That means I sold 100 units because I had on that purchase 300 units. So out of the 300 units, I sold 100 and we kept 200. Okay. Now from this point forward, everything else has sold. Okay. So, if you want to, am I on the right track? Well, check. This section is done. So you should always have your ending inventory count here, which is 1,300, which is what we have. So that means that my $1,300 of my 1,300 units of inventory are valued at $27,150. Okay. Now let's figure out the rest of the problem. Okay, that happened on January the 12th. Now we're going to March the 17th. That's the fourth purchase. And then we have 900 units at $24.50 that were sold. Okay. That gives me 22,000 or 50. And then we go to June the 2nd. That is my 5th purchase. That's 800 units at $25. That's 20,000 units. Okay, that's June the 2nd. Now we have August the 21st. That's our 6th purchase. That's 200 units at $26. That's $5,200. And last but not least, we have September 27th. That's my 7th purchase. I've got 700 units at $27. Okay, so what did we do here? We separated what we sold. Cost of goods sold is what you sold, and your cost of ending inventory is what you have left on hand. Now, using the Lifo method, you sell your newest, which is what we did. We sold the newest purchases, and we kept the oldest. We kept the oldest, okay? So we kept the 1,300 units that were the oldest, and we sold the 2,700 units that were the newest, okay? So it's just a matter of splitting it. Now, if you notice, on both of these, I've got 2,700 units, 2,700 units. But the value of my cost of goods sold here on the first section using FIFO is 61,500. Using Lifo, my cost of goods sold increased to 68,450. Now, for my cost of ending inventory, both of them are 1,300 units. That is what I have not sold. Now, the price or the value for those units, what we're going to report on the balance sheet is 34,100 if we're using FIFO, and then 27,150 if we're using Lifo. So it just depends which method do you use. Do you want to report on your balance sheet a high number of asset for your ending inventory? Or do you want to, do you want to report a lower expense? Okay, my cost of goods sold is lower than that if I use the Lifo method. Okay, so these are the two methods. Always make sure that these numbers, the units sold, and that the units of your ending inventory are the same. Okay. Now, the third item that we have is the weighted average. They're asking us to round our calculations to 2 decimal places. Okay. Now, this is the easiest form to do. It's based on calculating based on averages. So what we do here is we're going to get the total. Okay. The total provided right there. Okay. Okay. So we know that we purchased or had 4,000 units at one point in time, and the value of those units were 95,600. Okay. Now, using the weighted average, we're going to go ahead and we are going to do some calculations, okay? First, we're going to calculate the average cost per unit, okay? To do that, we're going to get the total cost, which is 95,600. That's the total on your total cost column, 95,600. And I'm going to divide by my total units, which is 4,000 units. Okay. And then that's going to equal 95,600 divided by 4,000, 23.90. Okay. 23.90. Okay. That is the average cost per unit. Okay. Now we can calculate my ending inventory. For your ending inventory, I know that I have 1,300 units left that I have not sold, and I'm going to multiply that by $23.90. So let's see what that gives us. This is what we have not sold. We have 1,300 units that we have not sold at $23.90. That gives me $31,070. Okay, so that is $31,070. That is your ending inventory. That's the cost of your ending inventory. For those 1,300 units that we have, they're going to be valued at $31,070. Now we have our cost of goods sold. Okay, we know that we sold 2,700 units. Okay, this is what we sold, 2,700 units. Okay, and I'm selling them at $23.90. Okay, so we have 2,700 times 2390, that gives me 64,530. Okay. Now, if you notice, using the weighted average, it gives you an amount in between both methods. Okay, it's like the best of both worlds kind of a thing. You see, for the Lifo, using the Lifo method, it was 27,150. Using the FIFO method, it's 34,100 for your ending inventory. Using the weighted average, it's 31,070. So it's in between these two numbers. Okay. For the cost of goods sold, it's 64,530. That's in between the 61,500 for FIFO and the 68,450 for Lifo. So using the weighted average gives you kind of like something in between, not so extreme as FIFO or Lifo, something in the middle. Okay, so this is just a simple calculation using the total cost over the total units. Okay, and then whatever the per unit cost is, you apply that to the ending inventory as well as to the cost of goods sold. Now, the more complicated item is the specific identification method. Okay, that one specifically identifies which items have been sold or not sold. So these items right here, it says here that these items are the 1,300 units that we have left on hand. Okay, so this is what we have left over. So this is what's going to go on your cost of ending inventory section. Okay. That's what's going to go here on your cost of inventory else. If it does not apply to this information, then it's going to go under your cost of goods sold. Okay, so let's start working this one. So did we have any items left over from our beginning inventory? According to this down here, no, we didn't. So then that means that all of my beginning inventory units were sold. So I've got October the 1st, okay? This is my beginning inventory, and I have 400 units at $20 a piece, okay? And I'm putting it under my cost of goods section because this represents the units that have been sold, okay? These are the units that I have sold, okay? Now let's look at the next one, October the 18th. On October the 18th, we had a purchase of 500 units. Okay, now let's look down here. Okay. Now we're going to be looking down here. From that first purchase of 500, I have 100 that we have not sold. So that means that we had 500 units. 100 have not been sold, so that means 400 were sold. Okay, so we're going to look at October the 18th. This is my first purchase. Okay, so I had 500 units, and based on the information provided, 100 of those units I still have on my warehouse. Okay, so that means that I have 400 units that I sold at $20.50, and then I have 100 units that I have not sold at $20.50. That gives me my cost of ending inventory for that purchase of $2,050. Okay. Now let's look at November the 25th. Okay, on November the 25th, we have a purchase of 200 units at $21.50 a piece. Down here, we don't have any data, so that means we're going to assume that November 25th transaction, all of the items were sold. Okay, so that's happening November the 25th. Okay, and this is my second purchase. Okay, and then everything was sold. We had 200 units at $21.50. That gives me $4,300. Okay, so the second purchase, which is my November 25th, that is not listed down here, so we're going to assume that those goods were sold. Okay, now we get to January the 12th. Okay, January the 12th. Do we have anything for January the 12th down here? Yes, we do. That second item. Okay, it says here that we have 200 units left from January the 12th. So January the 12th, we had a purchase of 300, and then that means that 200 of those units are still on hand. So that means that we must have only sold 100. So we had a purchase of 300. We have 200 available still sitting in our warehouse. That means that we must have sold 100 units. So we're going to go to January the 12th. This is my third purchase. So I have 100 units that I sold at $23 a piece. And then I have 200 units that I did not sell at $23 a piece. Okay. So it says here, for that specific one, for the third purchase, January the 12th, third purchase, we have 200 remaining, which is what we put down here, 200 remaining. Remember, the last column is what you have on hand. Cost of goods sold is what you sold, okay? So that happened on January the 12th. Then March the 17th, okay? What happened after January 12th? We have March the 17th. This is my fourth purchase. Okay, now what happened on March the 17th? It says that we have 100 units of those remaining, okay? So we have 100 units remaining, okay? This is happening on the fourth purchase at $24.50 a unit. Okay, so that means that I have left over 100 units at $24.50, okay, for a value of $24.50. Now, let's look at that fourth purchase. That fourth purchase had 900 units. So we had 900 units. We have 100 units on hand. That means that we must have sold 800 units, which is the difference, at $24.50. So for that purchase of 900 units on March the 17th, 800 units were sold at $24.50. 100 units were left on hand at $24.50 for the respective amounts. Okay, so that happened on the fourth purchase. Okay, on the fifth purchase is June the 2nd. This is my fifth purchase. Now let's look at June the 2nd. Okay, June the 2nd, I have 400 remaining from that fifth purchase. So let's look at the fifth purchase. We have 800 units that were purchased, and it's staying here that according to the data, and we are working on June the 2nd. According to June 2nd, we purchased 800 units. According to the additional information here, we have 400 units remaining. So that means that we have 400 remaining, and we sold 400. 400 plus 400 will give us the 800. Okay, so we have 400 units that we sold. Okay, at $25 a piece, and then we have 400 units that we kept at $25 a piece. Okay, so that happened on June the 2nd. Okay, August the 21st, the sixth purchase. Okay, we purchased 200 units. Now down here it says that we have all of those 200 units remaining on hand in our warehouse. So that entire purchase of 200 units was transferred over to the warehouse, and that's what we have sitting there, 200 units. So for that sixth purchase, okay, that happened on August the 21st. That is the sixth purchase. Okay, we have all 200 units on hand at $26 a piece. Okay, so that's happening on the 21st, August 21st. We have 200 sitting in our warehouse. Well, how many did we purchase? Well, 200. So the entire 200 units that we have purchased are going to a warehouse, and that's why we're adding those to our cost of goods. To our cost of ending inventory. Those units, those 200 units are still available for sale. Okay, and that happened on August the 21st. Last but not least, we have September 27th. Okay, this is my last purchase. I purchased 700 units at $27 a piece. Okay, so sorry about that. just deleting this because it moved. Okay, there we go. Okay, so the 7th purchase, 700 units. Do we have any remaining from that September 27th transaction? Yes, we had 700 remaining. So 700 that we purchased 700. Then it says here that out of that purchase, 300 are still sitting in our warehouse. Sorry about that. Out of those 700, we have 300 sitting in our warehouse. So we have 700, and then we're going to subtract the 300 that are sitting in our warehouse. That means we sold 400 units, okay? So we have 400 units that were sold, okay, at $27 a piece. Oh, I put it in the wrong column. Let me see. 6th purchase. Yes, it should be the 7th purchase. Okay, September the 27th. This is the 7th purchase. Okay, good thing I can go back. Okay, so on that 7th purchase, I have 400 that I sold at $27 a piece. And then I have 300 that I have left over in my warehouse at $27 a piece. Okay, so then that's going to give me my 2,700 units that I have on hand. These represent the units that were sold. 2,700. If you notice, it's 2,700 there, there, and there. It doesn't matter the method that you use. You're always going to sell the same number of units, which is in this case, it's 2,700. Now, my cost of goods sold is 63,200. This is based on the specific units that we have on hand. So we know that from each purchase, we have these number of units available. Okay. And then for my cost of ending inventory, it will be 1,300. This represents the units that have not been sold. Okay, so this is my ending inventory. I have 1,300 units at $32,400. So if you notice, there's a difference between each of the methods used. It's just a matter of what the company is looking for in terms of their calculations. You know, what data they want to use. Okay, but these are the 4 inventory methods that you're going to be tested on: FIFO, Lifo, weighted average, and specific identification. Make sure that you understand why we're separating. On the first three set of columns, I have my cost of goods sold. This goes on my income statement. Here you're going to put the cost of goods sold, what you sold. The cost of your ending inventory are any finished product that you have sitting in your warehouse that have not been sold. So in this case, we were given that number of 1,300 units, which if you see in every scenario, we have 1,300 units. That is my ending inventory. And then we calculate the cost of the ending inventory for that specific period. Okay, so there's a lot of information. Please make sure you go back and review the information on the ebook. If you have any questions, please get with me Monday through Friday. Don't stay with the confusion. Just either shoot me an email, a Blackboard message, whatever works for you, and I'll try to get back with you as soon as possible. Okay. So once again, this is going to be on your exam. So please practice on your homework. That way you can do better or do well on your test. Remember, you have 2 attempts for your homework and your quizzes. The highest grade is retained. So if I were a student, I would use the 2 attempts if I didn't do well on the first attempt to get more practice. Okay. Anyways, the highest grade is always retained. So it can either it would only help you. It will not hurt you to use that second attempt. Okay. So this is the layout as well as the calculations. So when they ask here required, calculate the total amount to be assigned to cost of goods sold. This is my cost of goods sold number right there for each of the columns. Okay. And then and ending inventory on September 30th under each of the columns. So then my ending inventory is right here at the end, 34,100. For FIFO, 27,150 for Lifo. And then we're looking at the ending inventory, 3,170 for the weighted average, and then 32,400 for the specific identification method. So that is basically it. Practice, practice, practice. If you have any questions, please reach out. I hope all of you have a great rest of your week. And until next time, have a good day.